guys? It's your boy Simon Says, and welcome to another Cobra Education, right? We give you these short clips where we just cover certain topics. Today we're going to be going over the Japanese candlesticks, their uses, their history, and their different types and what they kind of say in the market. Just off the rip, Japanese candlesticks are they're a way to tell when the reversal's coming, or how much strength the candle has. So let's get straight into it. Right here on our Twitter, you'll get our most up-to-date news. As after this session, we'll be getting into it with Dharma. Let's just go to our Discord server real quick and scroll to the bottom. If you go to the Cobra guide, you'll find our Bitcoin trading. And Bitcoin's kind of new, so candlesticks were really originated or associated like when the forex market started. And this is how our candlesticks chart. This is how one would look. Pretty much a green body, and wicks, right? We have green bodies for the buys, and then these red candles are saying the price went down from the last candle. The green bodies are just saying the price went up from the last candle. So that's pretty much all it is. And let's dive deeper, right? So the candlesticks, right? The candlestick charts were first used by the Japanese rice traders in the 18th century. They're similarly known to like the open, high, low, close bars. In fact, they also gave open, high, lows, close values for a specific time period. So that's something to note too. Every time period, we can't tell on this chart, but this is maybe an hourly chart where every candle represents an hour. 1 hour, 2 hours, 3 hours, 4 hours, 5 hours, 6 hours. But let's say this was a 15-minute time chart. So now 1 hour, 15 minutes, 30 minutes, 45 minutes, 1 hour. So 4 candles would equal 1 hour. So it's definitely something you have to learn and monitor all the time frames, so how the candlesticks are related. Because if you have, for example, these 4 candles, right? 1 candle, 2 candles, 3 candles, 4. For 4 hours, if this is an hour chart, this is almost a 4-hour doji, and you would know that just by seeing the candles. So that's why candles of symmetry are so important. So this is also known as the body of the candlestick. The body is that big bar, not the wick area. And the bars just mean shows the open and the close. So you can see on this one, this is the open of the green candle. This is where it closed at. In this time period, right? We don't know what time period this candle is. Maybe it's a daily. It hit up here on the high, and then it closed down here. So that was the maximum move for the day. And then this is the close. This is also the lowest it went for the day. And this is where it actually opened. So if this green candle closed down here, it would be a red candle. Capiche? Cool. All right. Now, and it's opposite for, the bearish candle. The top of the bearish candle would be the open, right? So this is the close. Next day flips, right? We come up for the day. We retest the high. And then the candle, it would have been a green candle, right, if we closed. But no, we flipped down for the day. We actually hit the support of this candle low as well. And then we just, closed right here for the day. So on this candle, we have a 2-hour doji, pretty much in effect. We also have, this is a more in-depth candlestick Bible. And it talks about like how they were, more originated in some deeper insights. So an open and high, low, close, right? The open and high of a candle, the open, the high, the low, and the close of a candle shows, the close price for a given period applied to any time frame. So pretty much, this is, another example of the highest price for the day, the opening or close. You can see how it could be a black candle, and we can still tell the same information. No color matters in this game. You could be green, red, blue, yellow, open or closed. So this is, really, candlesticks are really related a lot to life as well. It shows, you could push through it, and then, you just come back for a little bit. Um, there's also Heikin-Ashi, a better candlestick, so to say. This shows more of trend direction. So the Heikin-Ashi, also sometimes spelled Heikin-Ashi, or meaning average bar in Japanese. The Heikin-Ashi technique can be used in conjunction with candlestick charts when trading securities to spot the market's trends better. So this is like a trend, like how to pick up on the trend. On these types of charts, you'll see a string of green candles for the bullish trend, and a string of red candles for the bearish trend. And predict its future prices. It's useful for making candlestick charts more readable and the trends easier to analyze. This is, another good thing. Most profits are generated when in, a trending market, not when it's ranging, like Bitcoin's been of recently. Like, you've had to be really precise with your analysis and been able to switch from bullish to bearish recently, and have that fine tune in the market. But it's easier if the market's trending weekly or daily bullish, then you just you're looking for that sell to buy, or if it's bearish, you're looking for that buy to sell. So there's a formula for this like average bar. Let me see if there's a picture of it real quick. So this is a regular chart, regular candlestick, Japanese candlestick chart, and then we have the Heikin-Ashi chart. As you see, these are all one way of the trend, and then you have that quick downside coming. Then you have the bullish side. Notice right here, Doji candles, indecision. It turned bearish for one candle, and then here was like bearish for 3 candles. It was ranging, but it still got you pretty much. If you didn't sell right here, it still got you 3 more bullish candles, I'm guessing. They do look a little different, but basically the Heikin-Ashi just showing you the direction of the trend, kind of more simple. I would still say, if you're using Heikin-Ashi, you want to buy the supports, right? Buy these support wicks, and still kind of sell the top wicks. Try to find your top wicks. You can see this one was used as resistance. I have to look into more how much or how they're working. But yeah, cool. So putting it to use. These charts can apply to any market, right? So stocks, commodities, cryptos, all charts are the same. They use the same kind of candlesticks to be monitored. So most charting platforms have Heikin-Ashis, included. You just have to, switch it real quick, take a quick look. These are 5 primary signals to identify trends and buying opportunities. Hollow or green candles with no lower shadows, as in wicks, indicated a strong uptrend. Let your profits rise. Okay. Kind of no wicks to the downside. Just testing from the upside. Let your profit rise. Hollow or green candles signify an uptrend. You might want to add to your long position and exit short positions. Okay. Candles with a small body surrounded by an upper and lower shadows indicate a trend change. Risk-loving traders might buy or sell here, while others will wait for confirmation. So little dojis, which are candles with small bodies surrounded by upper and lower shadows. So like this one right here, little body, upper down shadow, upside wick, shadow wick, and then the trend continued a little bit. This one as well, you can see at the end of the downtrend, you had one doji. It was kind of a bullish doji, down a little bit more. Another one, we kind of reversed and went bullish. Okay. Filled or red candles, right? The black ones indicate downtrend. You might want to add to your short position and exit longs. Filled or red candles with no higher shadows identify a strong downtrend. Stay in short until there's a change in the trend. So these downside candles with no upside wicks are the ones you want to stay in and let the trend kind of push you into profits. And that's dope. That's dope. I definitely learned something new today. I'm here with you guys as well. That chart example above shows the Heikin-Nashi charts and how they can be used for analysis and making trend decisions. On the left, there are the long red candles at the start of the decline, and the wicks are quite small. As the price continues to drop, the lower the wicks get, the longer, right? So the lower the wicks got, let's just go in. Long filled candles indicate a downtrend. Lower long shadow, long lower shadows indicate the buying pressure. So this is kind of like the trend reversing, like, oh, every time it hits this point, it's bought up, right? And that's kind of what the wicks show you as well. As the price continues to drop, the lower wicks get longer, indicated that the price has dropped but was then pushed back up. The buying pressure is starting to build. This is followed by a strong move to the upside. That's where the long hollow candles indicate strength to the upside, as you see. Not really much upside resistance with the wicks, and then you also see no downside wick, right? There's no wicks on the downside. That this was kind of pointing out when to look for the longs. The upward move is strong and doesn't give major indication of a reversal until there are several small candles in a row. Okay, so I'm looking at this one, several small candles in a row with shadows on either side. This shows indecision. Traders can look at the bigger picture to help determine whether they should go long or short. Okay, so this is like the indecision in the market, the small candles. These charts can also be used to help keep a trader in a trade after the trend begins. It's usually best to stay in a trade until the Heikin-Nashi changes color. A change in color always doesn't mean the end of a trend. It could just mean a pause, as we were looking at with some of those dojis. And that's a great video. That's a great wrap up of candlesticks. Would we like to do any practicals? I think we're pretty good. Because candlesticks are simple, right? There's different types of candlesticks if we want to just look at that real quick. Formations. Let's just look at the different type of candlesticks. So, this is all bullish candles. Note that this is a full bullish candle with no wick to the downside, and no wick to the upside. So this is, the strongest a candle could be. This is what we've been learning about. This is a butterfly doji. Pretty no test to the downside, but also, little to no test to the upside. Body holding above its open. This would probably be its open. Looking, bullish. This is a normal bullish candle. Neutral, which is, indecision. And then this is a tombstone doji showing rejection already and it hasn't even tested its downside. As you know, everything, is, a flow. Let's go to some of the Candlestick Trading Bible. And this is, a lot of what we've been through already. Let's see if this skim through and see if it has any things that pop out. Body sizes. Okay, so the filled part of the candle is the real body, remember, right? The thin lines poking above and below are called shadows. The top upper shadow is the high, the bottom shadow is the low. Long bodies refer to strong buying pressure or selling pressure. If there is a candlestick in which the close is above the open with the long body, this indicates the buyers are stronger and they're taking control of the market. So kind of picture what they said here. If there's a candlestick with a close that is above the open with a long body, right? If a candle comes here and it closes, and the next candle comes and it's continuing, it's showing, strength in the market. Conversely, if there is a bearish candlestick in which the open is above the close of a body with a long body, this means the selling pressure controls, the market during this, choosing time frame. Short and small bodies indicate little buying or selling activity, so little volume. We kind of tend to get that during like the late Asian sessions. Candlestick shadows, or their tails, their wicks. The upper and lower shadows give us most important information about the trading session. Upper shadows signify that the session high. The lower shadow signifies the session low. Candlesticks with long shadows show that the trading action occurred well above the past and the open close. So look at where the candle opened, but it actually tested the highs, but it was rejected ultimately. Here we tested the lows, but we held support. Japanese candlesticks with short shadows indicate that most of the trading action was confirmed near the open and the close. If a candlestick has a longer upper shadow and a short lower shadow, this means that the buyers fixed their muscles and bid price higher, that they actually held the support. But for one reason or another, sellers came in and drove price back down to the end session, back near its open price. So it was rejected. And it's just about knowing your actual patterns formations. You could read this all day, but seeing it on the chart, is another thing, and applying it on every time frame and seeing how the candles relate on every time frame, because a 15-minute bullish candle will just be, it could be just like a little piece of an hourly where it just gets rejected hard. So, you got to check all your time frames. But they are one of the most powerful trading concepts, I'll give it that. They're how we analyze the charts. We could literally be going off a line chart, right? You don't know when to buy or sell. So candlesticks are very important. So this is more getting into the patterns of candlesticks and different things you'll see. Like we see this smaller bullish body, right? Normal candle. We flip over, we get a inducement to the upside. We find the market makers push price up and then sweep through the low. And this is a bearish engulfing pattern, right? The engulfing bear, as it states in its title when formed, it fully engulfs the previous candle, and the engulfing bar can engulf more than one previous candle, right? So, but to be considered an engulfing bar, it has to be at least one. At least one. Usually the last candle is the first one it engulfs. It's one of the most important candlesticks patterns, right? It shows the bears have control. We can see here, look how this is a bearish engulfing bar. We engulfed the last body, which was this little one. But then notice how the next one we have to engulf is this one, right? And then notice how this candle comes and it takes that low. And then it holds below it barely, below the low. And then the next candle opens, maybe a little retest as resistance. A wick might pop up, and then next leg down to engulf more. That's a strong trend, right? Shows us that sellers are in control of the market. It depends on the time frame, right? If you see a big 4-hour candle, you might know that the sellers are in control. But if you see it on a big, engulfing bar on a 15-minute, if this is a 15-minute chart, this isn't really showing too much. Notice this is more like a daily chart that it's on, or maybe 8 hours. As you can see, when this price action occurs in an uptrend, we can anticipate a trend reversal. So we see the Doji. I wouldn't call it engulfing bar because it took the Doji. I would call it engulfing bar when it takes this next candle out. Real quick, bullish engulfing bar. A bullish engulfing bar consists of two candlesticks. The first one is the small body. The second one engulfs it. Same thing, reversed, right? As we will just look to the chart pattern real quick. This one's a lot nicer. We see this in crypto a lot. A downside test. Maybe we have some support around this area that we wick to. And then engulf this next candle. And then we start running the trend, right? We start coming to these higher highs, getting rejected real quick. Retracement about 382 right here. And then boom, next sweep up. Doji candlestick, right? Doji is one of the most important Japanese candlesticks. When this candlestick's form, it tells us the market opened and closes at the same price. That means there's generally equality and indecision between the buyers and the sellers. No one is in control of the market, right? For an hour, your prices and your entry is just stuck if you entered on this candle for this hour. As you can see, the opening price is the same as the closing price. This signal means it can't decide. Doji. We see after the Doji, we had a nice downside. This doesn't happen all the time. The Doji could also hold the support, maybe hold the support of the Doji and then continue. Or maybe after the Doji, it just continues right straight away. But in this case, the Doji showed the indecision in the market and then we reversed. The chart above shows the market changed direction after the Doji candlestick. The market was trending up. That means buyers were in control. The formation of the Doji candlesticks indicates that the buyers are unable to keep the price higher and sellers push back price below the opening price. This is a clear indication trend reversal is likely to happen. Remember always that Dojis indicates equality and indecision in the markets. You often find it during periods of resting after, big moves, higher or lower. Just like, when the strength is kind of when you're coming down off, a big, when you're, when the trend is kind of exhausted, you get that Doji come in and then, you'll see kind of the reversal come. So it kind of shows you indecision in the market. That's what it is. Buyer and selling close at the same price. So this is the Dragonfly Doji, as we'll be wrapping it up in about 5 or 3 minutes. This is a Dragonfly Doji pattern. The Dragonfly Doji is a bullish candlestick when formed. This characterizes, a long lower tail or shadow, and that, shows that pretty much the buyers in the market bought up the dip, and now, the close is right by its opening again. We didn't even test the upside, so despite what we think, this is, a bullish candle. In the chart above, the market was testing its previous support level, and that causes a strong rejection from this area. The formation of a Dragonfly Doji with the lower long tail shows us there's high buying pressure in this area. If you could identify these candlesticks pattern in your chart, it'll help you visually see support and demand are located. When it occurs in a downtrend, it's interpreted as a bullish signal. But as I always say, you can't trade a candlestick pattern alone. You cannot do that. You have to have your confirmations. So when we see this Doji come in, right? That's the lowest point on the RSI. Then we come up for 4 hours, right? And then we get that dip. This dip was on the 40 RSI. This candle is below it, right? This candle close came in below this low, but this one's holding above the 40. Boom. This is what we look for. This is bullish. Look for a bullish dip for your entry right here. So when a downtrend occurs, it's interpreted as a bullish reversal signal. You cannot trade a pattern alone. You will be able to need to use other indicators and tools to determine high probability. This is key. We're going for high probability. So this is just showing us the trend, right? It's just showing us one thing. Knowing our market structure, and really seeking for more knowledge is gonna really put us over the hump. This is the Gravestone Doji, pretty much opposite the Dragonfly Doji. It's the bearish version of the Dragonfly Doji, actually. It's formed when the open and close are about the same price, but pretty much we just tested the upside as resistance. First, we didn't test the downside. Same thing, this is what I was saying earlier. So we opened here. We probably, come up a little bit for this candle. See that this candle rejected. We pretty much, this candle also couldn't close above this wick here, and then test that wick one more time, try to get above it, rejected. And that came, 2 candle closes after this Dragonfly Doji, so you don't have to rush into it right away, especially if it's on a higher time frame. Wait for that next candle, wait for that candle to build, see what the next candle is gonna, always anticipate what the next candle is gonna say in the trend. Anticipate those closes. So this is just saying, it's illustrating when the buyers push the price well above the open. Later in the day, sellers were overwhelmed, the market pushing the price back down. This is interpreted as a sign that the bulls are losing its momentum. And yeah, that's about it for today, guys. Not going to go into the Morning Star or anything else. I feel like those are a little bit more advanced. These are the 4 things that we should really be focusing on right now. Doji's engulfing candles, Doji engulfing candles, and Dragonfly Dojis and the Gravestone Doji. That's gonna really, take us to the next level. Noticing that every time frame has a different close coming in, and every time frame is telling us a different story. So we just have to be able to pick up on those stories, right? That the market's telling us. But yeah, guys, that's about it for the day. I'm about